If you're a business owner considering setting up a captive insurance company, it's important to understand the taxation of those insurance companies. In this video, we're going to go through what is an 831B insurance company and how it can be a powerful vehicle for you in your present and future planning. Now, 831Bs go by a few different names. They're called 831Bs, some just call them 831s, micro captives, small captives, but no matter what they're called, it's all the same thing. 831 is the part of the IRS tax code that talks about what is the taxation of insurance companies other than life insurance companies. So 831B is an election that an insurance company can take. Now, 831B was passed by Congress in 1986. And it was really a result of the liability crisis in the mid-'80s. Because at that point, it was very difficult because of capital and surplus requirements for property, casualty, and liability companies to write insurance. So they passed this so small businesses, medium-sized businesses, could actually create their own insurance company to insure their own risk because it was a lot more cost-effective for them to do this. So keep in mind, it's only an election. All insurance companies start out as 831As unless they take the 831B election. Just like all C Corps or all corporations start out as C Corps unless they take an S Corp election. Same concept. All of them start out as A's unless they take the B election. Now, once you take the 831B election, there's certain things that happen. There's premium limits. So once you take that election, you're limited currently, this is 2019, you're limited to $2.3 million in annual premium. Your premium cannot exceed that $2.3 million. But if you take that election, then your insurance company is not taxed on any of its underwriting profit. It's not taxed on any of the reserves that get released. 831B insurance companies only pay tax on their investment earnings. Let me repeat that because it's powerful. They only pay tax on their investment earnings. So if you created your own insurance company, took the 831B election, and let's say you had a couple $1 million that you were paying in medical insurance or general liability or workers' comp, and you pay that to your own insurance company. Let's say you paid $2 million in profit in insurance premium. And then you take the 831B election. Well, that money's deductible from your business over to your insurance company. And if you only paid out $500,000 in claims, then that $1.5 million, you only pay tax on whatever you invested it in. If you kept it in a checking account that had 0% interest on that $2 million, then your insurance company doesn't pay taxes. Let's say you put the $2 million into an account that grew at 5%. Then that's $100,000 in earnings. Your insurance company, it's a C Corp, remember, it only pays $21,000 in taxes, not tax on your entire $1.5 million underwriting profit as you would in the 831A. So that's how they become so powerful vehicles for clients to use. Now, there are a lot of other requirements. So don't take, this is all the information that you need to know. This is a brief explanation of 831Bs. If you have any questions, make sure you put them down below. We'll monitor those. We'll answer your questions. I'm sure when you go through these, you're going to have questions. I'd also highly recommend that you go to riskmgmtadvisors.com. That's riskmgmtadvisors.com. And there's an assessment you can take. As a business owner, you can click on that and you can enter your information and it'll tell you quickly the captive works for you because of this, or it doesn't work for you because of this. Also, if you're a client advisor, you can click on the same thing. Enter your client's information. It'll tell you quickly, yeah, this is an ideal prospect for a captive, or it doesn't work and these are the reasons why. Down below on the same website, there is the ultimate guide to captive insurance companies. It's a 16-page guide and it gives you more details on how captive insurance companies work, why they work. It's just a valuable resource for you as a business owner and as a client advisor to get more in-depth information on captive insurance companies.